Hi dear traders, there has been increasing speculation over the future of the Fed's rate hikes. Investors partially believe in a 0.50 rate increase when US inflation came better than expected. That only fueled speculation. Markets also welcomed the news about strong growth in personal spending on the back of rising income, as it reflected another possible surge in inflation. Let's see how currencies and the commodity market reacted to the data. US dollar index, tracking the price of the US dollar against the basket of 6 major currencies, gained 1.3% last week, marking its fourth straight week of growth. The index updated its 7-week high near the mark of 105. The FOMC minutes revealed that the Fed officials had taken into account the risks of higher inflation. Policymakers are guided by these particular risks when they decide on raising interest rates and keeping them high for as long as inflation reaches 2%. The euro-dollar pair traded at the low of 1.0550, unseen since January 5th. The Eurozone is still dealing with persistent inflation, and the ECB is expected to lift interest rates by 0.50% at the next meeting. The greenback is now in higher demand than the euro, which is less attractive amid the energy crisis and recession risks. Meanwhile, British pound-American dollar pair lost 0.73% last week. The price closed at the support level of 1.1950. A breakout and consolidation below the mark trigger a sell-off. Although inflation in the UK is still in double digits, the Bank of England is likely to increase the interest rate by 0.25%. At the same time, American dollar-yen pair rose to a 2-month high last week. Traders realized that the Bank of Japan would unlikely to change its monetary policy stance after Haruhiko Kuroda. Incoming Bank of Japan Governor Katsuo Ueda said on Friday that the central bank would maintain ultra-low interest rates. Gold saw a decrease in demand amid growing geopolitical tensions between the US and China over the conflict in Ukraine. The metal's price is still shaped by the Fed's interest rate and US bond yields. Last week, gold traded at $1,800 per troy ounce, its lowest level since the beginning of the year. Meanwhile, oil prices managed not to show weakness. Recession risks in Europe and the US were offset by forecasts of a reduction in oil supply in the energy market. Thus, Russia, one of the world's largest oil exporters, announced it would cut exports from its western ports by 25% in March, exceeding its previously announced production cuts of 500,000 barrels per day. Investors also expect that China's oil imports will reach record levels in 2023 on the back of growing demand for fuel and the launch of new refineries. These are the trends of the last trading week. Stay tuned, don't miss our daily news reports to be always in touch with the latest events. See you!